Mark, let's talk about oil prices, because this is a standout mover this morning, down by 3.5% at the time of speaking, 74.73 on the Brent price. It's been a volatile year for oil prices, but even by those standards, that's a pretty big move, a confluence of factors playing into the hands of oil bears, it seems today.
Yeah, I think it's a really interesting how low oil prices are. Given the news flow of the last month, we've obviously having an escalating situation in the Middle East. And, you know, almost by the day it's been escalating. And even though China's stimulus has disappointed some very optimistic hopes, we still have a load of China stimulus that has come through from where we were a month ago. We've had US growth be upgraded. Everything from the demand side, I guess the Middle East is also supply side, everything you think from the news flow side should be supportive for oil prices. And yet they're not far off the bottom end of the range the last couple of years. And I think that shows that there's just such an overhang of supply that is ultimately waiting to come in the market. And that's really the factor kind of going forward for next year. So I think the long-term story for oil is that we're going to get spikes on demand stories or on news flow disruption. But ultimately, it seems to me that oil prices have a lot of downside over the next couple of years.
Well, Mark, we've heard that argument so many times, in that because the market is so well supplied by the United States and others, therefore there is no geopolitical premium. But is it fair to say that the almost $3 drop we're seeing in Brent crude this morning is a geopolitical premium that was baked into this market?
You know, it does seem like a bit of an overreaction, I guess, which is your interpretation in the very short term. But I guess it reflects the fact that you've just got such underlying pressure on oil prices that it's those who are betting on a bullish surprise that are the weak hands. And so when you remove that risk premium, they're the ones that have to capitulate. And I think that's the long-running story here. It's not that we can't get oil price spikes again, but it's that it's going to continue to get downside. And you've got to remember, oil prices on an inflation-adjusted basis have not done well at all in recent years, not just where they are in nominal terms, but inflation-adjusted, they've done even worse.
OK, let's talk about US stocks for a moment then, Mark, because we've seen, I'm just checking my numbers, 46 year-to-date high for US stocks in yesterday's session. It's easy to lose track. And a reminder that it's the technology sector can be to the fore, can be the thing that sets the pace, and that certainly will be something we focus on during the earnings story.
Yeah, look, as you know, I've been bullish stocks all year. I continue to be bullish. I'm wondering what's going to derail it. So I don't think earnings are going to derail it. Expectations are pretty low, and we know the economy did well in the third quarter. We know there's still demand for chips on the AI side, so earnings will likely be supportive. I am worried about ultimately whether the election might derail it. What's the timing for that? If earnings are going to be supportive, but we're only 3 weeks away from the election, how do you kind of play off those two inputs? Overall, US stocks are expensive, but remember, we're in a wonderful macro environment that remains very supportive overall.